Hello, traders. It's 8:03 a.m. Chicago time on the 2nd of September, 2020. Thanks for joining me. It is Wednesday. This is episode number 1832. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Well, rinse and repeat. Rinse and repeat this morning. We do have a lean towards risk allocation this morning. You should be hearing me loud and clear. But we have an allocation to risk this morning with the DAX leading up 259 points or 2%. The Euro Stoxx up 1.93%. The NASDAQ follows up 116 points already, almost 1% at 0.94%. The S&P is up 18.5, so we have a gap up this morning. Gap rules applied. Dow is up 124 points or 0.43. The laggard today is gold. Gold is down $9.70 or 0.46%, trading at $1,969.70. This is a pretty good time to be a trader, to watch how the world responds to what appears to be somewhat of an asset bubble currently. So whatever. I mean, I'm not placing judgment on it. It is what it is. But we're coming in here to every day and seeing that we are higher and higher. And yet again, we are here this morning and see that the market's at all-time highs. The S&P has pushed through the 3550, unbelievable 3500 handle, 3550, and has pulled back a little bit, but still holding a bullish tilt. In terms of what is on the calendar and so on, there's ADP this morning came in at 428,000, which was a lot weaker than 1,000 expected, than the million expected. We still have factory orders at 10 Eastern, a half hour after the open, expecting that to be at 5.4%. We have Feds Williams. And then we get crude oil inventories at 10:30. Then we have Bank of England's Haldane at 11:30. Fed's Mester at noon. Fed's Kashkari at 2. And then this evening, Australia has its balance of trade for July, expecting plus 5 billion Australian pounds. And then also China has its Caixin Services PMI for August at 9:45 Eastern. And so that's where we stand. Let's take a look at what was expected yesterday. What happened here? Oh, damn it! I closed the browser with yesterday's as I clean up my screen. To prepare for the broadcast, every once in a while I just do this thing where I close the browser with the prior day's stuff on it. And having not slept much last night means that I'm not really all there. So minimal trading, if any trading today. Here's the what we expected yesterday. The primary scenario is looking for a response back towards 3504, the MC point of control. And then I was looking for to push to the MC point of control, which was the prior day's high volume node, also high volume node in the overnight session. Fail, rotate, and test the range down. I did say that I expected it to remain in range yesterday. If it did that, the secondary scenario was a dip. I was looking for a dip towards 34.95. 34.95 to base, come back, consolidate, and then run up for a the correction at the close. Both scenarios really were conservative yesterday. Was not looking for more than about 20 points of range. Scenario 2 is pretty much what worked out. Remember, we're looking for a dip to 34. What was it? 34.95, and a run to about 35.11, 35.13. Really, here's what actually happened. Let's turn off the stock zones here. We open, we push down, and we get into 34.91, so slightly lower. And what it does is it tests this high volume zipper from the last day of August, from the close of August, and then sets up a base, and it immediately turns and goes across the value range to 35.10. Remember, I was looking for it to go to 35.11, 35.13, 35.13 being the prior day's high, 35.13 even. And it pretty much accomplishes scenario 1 right off the open, pulls back to the mid, really nice solid test of the mid, and then it extends above the prior day's high by 2 ticks. Now at this point, I'm starting to, we do have a delta that is positive. We do have large upward rotations versus downward rotations. Pretty much everything is saying stay off the shorts. And in fact, I traded this in the NASDAQ, not in the S&P. But but with the 2-tick test of the prior high, it looked like it was pretty much done on the top side. So I was looking for a pullback to mid, and which coincided with the prior day's point of control. Now pull back to mid, and I expected chop for the rest of the session. It chopped for a while, and then it started to squeeze the push higher, to squeeze the market higher into the close. We ended up pushing to 35.27 and pushing through a couple of measured moves, one of which was at 35.25. And that's where we stand. The overall profile, multi-distribution, multimodal, if you are a statistician, profile, it looks like it's a price discovery profile, but it successfully moved the point of control higher, moved value higher, and so on and so forth. There's really very little to say here other than it's really this market has surpassed everybody's expectations and continues to attract money from around the globe, with an S&P valuation of about $33 trillion. That's a T, $33 trillion. Pretty insane valuations. But that's how we create new territory. It doesn't have to. The market doesn't have to stay within a range. Those people who think that the market is, has to revert back at some point. It does get a pullback, but it doesn't have to revert to where it was. So that otherwise, we haven't made any progress, right? So, but this is kind of quite vertical in the way it's taking new highs every day. This does not color my view on how to trade this. Okay, the fact is, and it's more important than ever, really. The fact is, we have to stick with trading what the market is doing rather than what we believe. The overnight session had a really good volume of 258,000, pretty high volume. And yesterday's trade had pretty good volume as well. 961,000 contracts traded in the day session. Anything between 800 and 1.1 million, 800,000, 1.1 million is pretty solid. And it has petered out. It has tested the high. It looks like it has found sellers up there at the high, and is pulling back, but it still remains in the high volume node. It still remains above the full session VWAP, above the full session point of control. There is a cluster of measured moves here. Again, measured moves are really just a guess or an extension of the energy of prior moves. But there are multiple clusters based on multiple swings that are all kind of bunched up in here. This area here may, and I emphasize the word may again, represent a rest area and a potential pullback area for the market. And but that's where we stand. Um, so that's that. There's not much more I can offer here other than to get into today's expectations. We are in new all-time high territory. We don't have anything to lean against in terms of existing values, an existing auction. And so it's really your guess is as good as mine. In any case, I'm looking for having the market sit here on top of VWAP and mid. I expect an open that tests slower, that pushes down into this high from this morning all the way, which coincides with 35.41. I expect it to push into 35.41, consolidate, come back to the open, and squeeze to push that high yet again. Gap rules apply, so if it does not come back and fill this gap zone, then it is likely, within the first hour, there's a higher probability by a small margin that it'll just continue to push higher. We're already above one volatility sigma, which is at 18 points from the close. The close to close sigma is 18 points. We're already above it. So the market's already, you could say that it's already relatively stretched. But this is what I'm looking for on the first scenario. The secondary scenario, though, is looking for the action to balance out just a little bit. So on the secondary scenario, an open auction that rests here, an open auction out of range that rests here, attempts the high, squeezes, consolidates, pushes the high, and then comes back to consolidate and then turn lower to test the entire value range of the overnight session and moves into this lower distribution down here in the 33 area. So I'm looking for 33 down here and a test of the overnight high up top, and that'll be scenario 2. This will give us a resting day and a potential gap zone remaining open. In either case, at 18.5 point gap, I expect the market to leave the gap open. The closing gap is at 26.75, and that's where we stand right now. Okay, there's not much more here. I can say here, it's the same formula every day, and we just have to wait until the market actually finds sellers, which it has not successfully done yet. Remember, price will keep advertising higher until it finds the opposing force. The opposing force in this case is sellers. Once it finds sellers, it next seeks to find value. Once it finds sellers, it'll turn around and it'll look to find value, a balance point. Once it finds a balance point, the goal is for it to sit there and chop around and facilitate trade. Those are the days where we roll our eyes and say, oh my God, it's so choppy, the market's not going anywhere. Well, that's when it coils and it actually trades quite a bit of volume, and that's considered a successful auction that has found value. And as long as the market is not able to find the opposing force, the sellers, then it'll keep going higher and higher and higher until it goes high enough to entice those people who wanted to sell in the first place or are holding a position to liquidate it. Then the rotation happens relatively quickly. We have not done that yet, so there's no reason to talk about how the market's overdrawn and over this. It's not. It's telling you, the auction is telling you that it has not found its sellers. And if it's right there in our face every day that it has not found the sellers, then why are we considering anything but what it says? Okay, it's a difference between a macro investor or a fundamental investor and a trader. A trader just looks at what is there, fact, whereas an investor has to speculate on the future direction of a stock based on the fundamentals and the potential of its growth. We're not here to decide on the potential for the S&P or the Nasdaq's or Russell's growth. We're here to trade what's in front of us. We're here to respond, not create moves. Okay, just remember that there's a lot of noise out there. You need to filter out the two different things. We're just slaves to price and volume, and we follow as it leads rather than speculating on where it'll be next week or whatever. Good luck today, and I'll catch you tomorrow. By the way, if you have not yet taken a look at EdgeClear, I would really love it if you would have a look. You do need a broker to access the markets. I would love to have our team be your broker for your futures market access. We only clear futures. We still have the most competitive micros rate at 98 cents all in per round turn, including a state-of-the-art platform, which is Rhythmic or CQG Web API. But it's all there. We clear all the micros, including the new micro options. But we also clear all electronic futures, in addition to providing edge pools and several other features. We're about to release some tech. I would appreciate your support of this company that I founded and launched in April with an awesome team. Please join us. It's at edgeclear.com. Good luck today, and I'll catch you tomorrow morning. Take care.